Okay, after the market. After the market closes with Fibonojji. Remember this? This just happened, dude. I was just playing this song, telling you about how beautiful Alicia Keys is, and how, I'm following Twitter, and I'm like, remember I was talking about all kinds of stuff, and remember that? Okay, let me tell you a reality of day trading, and this is just as important as the haha LOLs and just as much of the stuff, because whenever I try to teach day trading, I want to be both entertaining and I also want to be informative, and I want to teach people, regular people, whether you're MIT or you're a housewife or a house husband. If there's anything we've learned, that this channel is a gender neutral channel. So let me show you why this is so important. Now remember earlier I was talking about how I'm short Twitter, and what that means is I'm betting that the stock goes down. Well, I guess think of this as stock tip 401. Earlier I did 400, and I talked about, I have a rule called 1 o'clock where I like to revisit the market at 1 o'clock, and it gives me a fresh perspective. I like to take a little break. I have a lot of rules, and so if you hired me to teach you day trading, we would talk about Elliott Wave, and then we'd spend the rest of the time talking about Jonathan Fibonacci's rules. Holy shit, I got all these rules, and one of the rules is 1 o'clock. I like to revisit the market. And then the next rule is we want to be very deliberate and intentional about the aftermarket, and do we hold an overnight position? Look at the volume, look at the stochastics. Now, see this big O, I don't know if you can see this here. See this shadow right here? See this big giant boom? Now see, the market, this is a 2-minute chart, just to give you perspective. Each candle here represents 2 minutes. So this video has been going on for 2 minutes, and this video would be 1 candle, okay? So I'm looking very, very microscopically at the market. Not even 5 minutes. I'm looking at a 2-minute chart. And it stabilized, it went up, it made an Elliott wave. Notice how it stabilized here. It did something what I call cupping. That's a Fibonacci term. It cupped. And then now we're in a motive. This is a classic motive wave. Here's an entire cycle of Elliott wave. Notice the 4th did not retrace to a 2. So you're counting your money. Now I'm short. I told you the stock is going to go down. Now I also said if it strengthens, we want to turn our positions around. I did that because I have a Fibonacci rule of 1 o'clock. Now look at this. What happened right after the market closed? Holla nigga. Holla nigga. Now that happened immediately, and it erased all those gains, which is another reason why I'm short Twitter. So all day long it was trading between like 7-8 cents, and then after the market, or it strengthened all the way up, it formed a classic Elliott wave. Notice at the 4th wave. Now I'm noticing here it did not retrace beyond 2. I immediately drew a line on 2. I marked the twain. This is a more advanced day trading tutorial, but I want to show you that the aftermarket could be devastating. And if you were long, you were betting that the stock were going to go up. Had that retraced beyond number 2 or level 2, and what I'm pointing to is this specific candle here, had this move retraced beyond this candle here and broached the 1 airspace, then that short would have been confirmed. My personal bias is in the aftermarket, it's going to retrace, and then tomorrow is going to be a further down. That's my strategy built upon Elliott wave and marking the movements as it happens. Okay? Aftermarkets could be devastating. You think you're making tons of money, boom, aftermarket. You might not sleep that night. What if you had 5,000 shares, 10,000, 20,000? So aftermarket is very, very important. The market can change, and you're locked out of the market. You have to wait for the new market to open up, unless you're some sort of a hedge fund, super algorithm guy in San Francisco. For most people, they're locked out of the market, which I think personally is unfair, because if the institutional buyers can close positions right now, notice they're closing positions. Who else is talking about a market equality except Jonathan Fibonojji. You're like, you talk about all kinds of stuff. You talk about market equality, aftermarket, Jesus. You're like all over the map. Well, that's Jonathan Fibonojji. I said it before and I'll stand by it. The decision to have an overnight position is 50% of your day trading success. 50%. What's the answer? Skill, 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 practice, practice, practice. Hire Jonathan Fibonojji. Give him tons of money. He'll teach you how to trade. You guys be good. Email me your thoughts, Americana417 at gmail.com. This is Twitter, TWTR.